Price appreciation recently fell in your Manhattan report. Can you explain what happened there?
What we saw in the fourth quarter of 2005 was a continuation of modest appreciation in the market, but we also saw a sharp drop in the number of transactions, that the number of sales fell. But I believe it's a temporary holdback. We had tremendous negative economic news at the end of the summer with the two hurricanes. We had rising mortgage rates, a spike in gasoline prices. The war in Iraq wasn't going very well. So there are a lot of factors that came together that caused buyers to sort of hold or wait. Judging by the statistics that we're gathering just in preliminary for December, where we saw a tremendous surge in the number of transactions, and we saw a lot of large transactions actually sell. We appraised about six properties that were sold in excess of $20 million, and they're expected to close in the first or second quarter of 2006.
Is this drop in price growth reason to panic?
I don't see any, at least at this point, I don't see any near-term problems. I think the thing we have to watch for is how mortgage rates behave, because I think that's the key in determining what sort of volume of transactions we're going to see. The other wild card is the number of new developments coming online, which seem to be gaining steam. So I think a year down the road, if the pace continues to increase, we could have some issues in terms of price appreciation, simply supply and demand. We have a lot of units coming online. We're going to see price appreciation moderate somewhat.
What areas of Manhattan have the most development in the pipeline right now?
Well, development is surprisingly evenly mixed. If you divide Manhattan into quadrants, east side, west side, downtown, and uptown, they're all behaving in a similar manner. The units that are coming online in terms of quantity, you can look at it different ways. In terms of sheer number of developments, it's clearly uptown, which would be Harlem, Morningside Heights, Inwood, etc. But those projects are very small. They're 6 to 10 units. So in terms of sheer numbers, they're not matching the downtown developments. The other three quadrants are pretty evenly developed. As far as appreciation goes, you're seeing tremendous upside on the uptown, meaning that the rate of appreciation uptown is about double the remainder of the island.
What advice would you give home sellers and selling agents on pricing their properties?
Well, the biggest change that we've seen in the last few quarters is how imperative it is to price correctly, meaning that when the market was rising rapidly, we were seeing units come online at well above what, say, a similar unit in the same building had sold a few months ago, and it would sell. Today, there's much more stigma attached to properties that are not priced, that are simply overpriced, where the seller just wants to throw it on the market and see what will happen. What we're seeing is much more importance paid to units that are priced accurately, because at the end of the day, our data shows that you're going to see that unit end up selling for more than if it were thrown on at a much higher price, and then the list price kept being revised downward. I think it's a science, and it's also you have to open your eyes and look at what the competition is right now. It doesn't really matter what happened 3 months ago. What's on the market right at that moment? What are the buyers of your unit going to look at in competition with your unit? And that's critical. So really sort of the idea of access to up-to-date information to get a sense of where the market is going is imperative.